Hey, what's going on, guys? My name is Miles. Welcome to another video on this channel. And today we're going to be talking about, is it good or a good idea to invest in real estate in 2023? Is it good or bad, right? Like, we all know what's kind of going on right now in 2023 with interest rates being much higher than they were last year, and at a rate that's definitely higher than we've seen in a long time. So is it really a good idea? Is it good or bad? And we're going to talk about that. There's two things that you should really think about. And really, number one is mindset, and then number two is skill set. And that's what this channel is all about. Let's talk about the mindset of investing in real estate, or at least the economy and what's happening right now. Because if you just understand the fundamental aspects of economics and real estate, it actually kind of helps you understand what's really going on, and it doesn't seem so much like gloom and doom as you might hear on the news. So we know that interest rates are definitely much higher than they were last year, and they basically increased at a rate that we haven't seen in a while. So what does that really do to the actual market, right? So when interest rates are higher, that means buyers typically tend to soften, is what we say in the real estate market, that this market right now has kind of softened. And what we mean by that is there's not as much buying activity, right? Buyers have kind of pulled out of the market because interest rates are higher. Now, why is that? Because the same property that they could have bought when the interest rate was much lower is now much more expensive, and maybe even to the point where they can't afford it anymore. So there is this sort of housing affordability crisis that we're having in the United States. And with interest rates really getting as high as they have been, we essentially have had buyers just back out. Like, this is just way too expensive. Like, I'm just going to wait until I see, the market shift a little bit more, interest rates go back down, etc. So what ends up happening is the natural response from sellers is they have to drop their prices, because if you don't have as many buyers buying, that means there's not as much demand, right? So this is essentially just supply and demand, basic economics. You have houses that everyone was wanting to buy, and the market was hot and all this stuff is going on, but then interest rates just shot up, and now buyers are like, man, it's way too expensive to buy the same property that I wanted to buy. Let me wait until interest rates go down. So now they've sort of stalled. They've pulled out of the market. Now they're waiting on the sidelines. So you have less people that are buying. So in order for sellers to sell their homes, they have to drop those prices, because they need to drop them now low enough to basically encourage buyers to buy their property, because it's kind of now what we would like to call a buyer's market. Before it was a seller's market. I mean, you could basically sell your property for all kinds. I mean, obviously, if you're listening to this video, we all know last summer, oh my goodness, 2022, July, June, July, May, any of the months kind of in 2022, it was just outrageous. People were buying properties, $30,000, $40,000, $50,000 over asking, sight unseen. It was just all kinds of crazy stuff because, appreciation and the market was hot. It was just crazy. But now with interest rates being so high and home prices actually kind of going down all across the country in a lot of areas, like I said, you have a lot of buyers that have pulled out. So sellers really need to lower their prices. So you got home prices going down. So it seems like the value of homes and real estate is going down. So, if you look at the whole picture, especially with the gloom and doom news that's out there, it kind of seems like this is not a great time to invest. You have interest rates that are high. You have buyers that have pulled out of the market. You have sellers that are lowering their pricing just to be able to sell. So you have home values going down. It's like, man, this seems like really bad. Again, it's all about the mindset. To me, that sounds like opportunity, and here's why. A couple of reasons. Number one, that just means there's less competition, right? So when you have a number of buyers pulling out of the market because they just feel uncertain, or interest rates are high, so they feel like they need to wait until it kind of softens and the rates go down, then that just means you have less competition. And that also means with less competition, that gives you an advantage to be able to negotiate a little bit more with a seller, because there's also more pain with the seller, right? So the same seller that, these same sellers that were selling properties and they were just flying off the shelf, well, now they're sitting on the market a lot longer, and it's kind of getting sellers a little antsy, like, man, my property's not selling. So it makes them a little bit more encouraged to, get, which is the third thing I'm going to talk about, creative, or secondly, just, really just sell their property at a lot cheaper price. I mean, they have to. I mean, it's just, buyers aren't there. You got to lower your price to be able to sell it, because it's not just flying off the shelf and we're not market anymore. So that gives you a little bit of that advantage. And then going into number three, kind of what I alluded to a second ago, is creative finance. It allows you to actually get a little bit more creative on buying real estate with having less money, or no money at all sometimes, because sellers are, again, really having a lot of pain right now. And they're thinking, okay, my property's been sitting on the market for 180 days or 200 days, and then you come along and you say, hey, that number that you originally listed for, I saw you came down 30,000. You reduced the price by 20,000, 15 or 30,000, whatever the case is. You could maybe negotiate with them and say, I'm actually willing to bring that purchase price back up a little bit if you're flexible in how you sell the property. Now, they might be really excited because they were thinking they were going to get less, but now you brought the price back up. Now, why would you do that? Why would you give them more money? Well, because you are coming to the table with less cash. You are able to pay more for a property when you actually have to come to the table with a lot less. So imagine if you had to buy a piece of property for $100,000 cash, right? But the property was worth like $100,000. Would you do it? Probably not. If you're looking to get some equity, or if you're thinking about your cash on cash return, like, man, I'm having to buy $100,000, basically paying retail for the same cash. But what if you could buy that property for $110,000? So even more than $100,000 because you only had to come to the closing table with $1,000. Would you buy that? Absolutely. If I only had to pay $1,000 to buy this property, even if I was paying $10,000, $15,000 over market value, I would still do it because I'm only paying $1,000. And I'd hold on to that property, and by the time it appreciates or I decide to do whatever I want to do, I mean, essentially I won anyway. So the value of being able to come to the table with a lot less allows you as a buyer to be able to pay more for a property because you're actually going to have the seller hold a note. Essentially, it's seller financing if they own it free and clear. Or if there's a mortgage on the property, you could buy it subject to its existing mortgage. It's another powerful strategy. Homes that are on the market right now that are not selling, it gives you the ability to say, hey, look, I'll pay a little bit more if you just let me take over that mortgage. And then you work out with the seller, maybe bring a little bit of cash at closing. Maybe they don't even care about any cash at closing. Maybe they just want to get this thing sold and then now actually just start making income. I'm not going to go too in depth with it, but it's essentially called a hybrid method. You can take over the existing mortgage, not assume the loan, but you can start making the mortgage payment on the seller's behalf and buy the property. So the deed gets transferred over to you, but the loan, the debt stays in their name. But it allows you to take over that mortgage and buy this property with essentially not having to go to the bank, qualify, pull tax returns, debt to income ratio, all this, because there's already a mortgage in place. You just essentially buy the property, the deed gets transferred over, and you just start making payments on the financing that's already in place. Now, they're probably going to have a bit of equity that they're not going to just walk away with. So you can work out a second position mortgage. So it's just a second position note or loan or mortgage where you pay them a certain amount of money per month to pay out the equity. So you can actually do a deal. Now, I do this all the time. Creative finance is actually more common than people think. You just have to understand and learn how to communicate that to sellers. A lot of times people just don't know how to package and explain or communicate to them the benefits of doing this. They always just talk about the name. Oh, I'd love to buy this property subject to, or hey, would you be open to seller financing or owner financing? These things are what I like to call trigger words. You don't want to say these words because they trigger in the seller's mind things that maybe they heard from a friend or heard from a story. They just don't want to do it. So if you explain to them the benefits, that actually puts positivity in their mind of like, wow, okay, you can take over my mortgage that's already in place. You can buy the property for more. The equity, I'll get more of the equity now because you'll just make payments on that. Oh, heck yeah, I'll do this all day. It just makes more sense to them. So it's a really, really powerful strategy, guys. So again, I don't want to make this video too long, but I just wanted to talk about the mindset of 2023. If you're listening to this video past 2023, I apologize, but I at least have to make this video for 2023 because it's only January. So I have a whole year of people in 2023 that can watch this video and understand that just because interest rates have gone up, it doesn't mean that it's not a good time to invest. If anything, it is the best time to invest. You have less competition. You have sellers that are in a lot more pain. It gives you the ability to be much more creative on how you approach these sellers. And it's really just a mindset. You got to work on your skill set on how you do that. And that's what this channel is about teaching you the skill sets. And that's what my coaching program is about. You can join my coaching community. You can join my free Facebook. I have all types of free resources. Guys, listen to my podcast. I do seller calls. Literally, you can hear seller calls of me communicating to sellers these strategies that I'm talking to you guys about. So you can just click the link in my description as well. And there's so many ways to connect with me. But ultimately, the question is it a good idea to invest in real estate in 2023, depending on the climate that we're in right now with higher interest rates and things like that? And the answer is it depends on your mindset. It depends on your approach, your skill set. And if you have the right mindset, you'll understand the benefits of investing in real estate right now and taking advantage of the opportunity that we have right now, not at the expense or in a negative way, but taking advantage in the sense that you have an opportunity to be able to invest maybe a lot easier than you would when it was such a hot market and everybody, you're competing with hedge funds and all types of buyers that you couldn't normally compete with. But now you have the upper hand. It's more of a buyer's market. You have the ability to negotiate with sellers much more. You have the ability to do more creative finance, and you have the ability to talk to sellers that are much more motivated because their properties are maybe on the market for a lot more, or even if it's off market, home prices are going down, interest rates are going up, so you can explain to them, hey, I have to buy this property for a lot less for X reasons. So thank you guys for watching this. Hopefully that made sense. Let me know if you have any questions, especially if you are getting started in real estate investing in 2023. You definitely do not want to sleep on this. You don't want to miss this opportunity because there is a massive shift in wealth right now with what's happening in the economy. There are people that are waiting. They've been waiting for something like this to happen where everyone just disappears and now the gates are open and they can just run in. And I actually talk about in another video the power of understanding who the buyers are right now that are buying as well. If you don't really have the money or the skill set to get involved in real estate investing, but you can find the deals. You can source those deals and provide them to those buyers that have been waiting right now for something like this to happen. So that's why I'm just saying, man, this market right now, there's so many opportunities for you to be able to change your life, especially financially. You just have to have the right mindset, be around the right people that are seeing it in a more positive way, in a beneficial way, and then take advantage of that opportunity. So anyway, thank you guys for watching, and I'll see you guys on the next video.